Hi, everyone. This is Jason Birack of Wall Street from Main Street. Today, Mo Dawood and I are joined by investor, author, trader, and entrepreneur David Morgan of The Morgan Report and also silver-investor.com. Thank you for joining us tonight, David.
My pleasure. Thank you.
All right. Well, the first topic we'd like to discuss is the silver market. And today, this silver made a big move, went up $1.14, blew past the $35 resistance, and according to my technical analysis, it could make a move up to $40. But, you know, with the paper market, you never know what the next move could be. It could get smashed down. So, David, what's your technical analysis on silver after today's big move?
Okay, Mo, and I just want to be clear as I answer this, just to protect you and me, that this wasn't a setup. I did send out a alert for the intermediate service that I provide, where I allow people to look over my shoulder as I do charting or technical work right in front of them. And I have been watching this formation for quite some time. It was a cup and handle formation. From all of my experience, cup and handle is one of the most powerful formations that you can have. And what you look for in a cup and handle is a breakout of the handle on big volume. And it was a perfect setup for today to get into the market, and the market came through for us. As far as is it going to 40 or not, that's a tough call to make. You admitted you don't know. I don't know. I'm more conservative because I'm a little older, and I've got probably a couple decades or more on you as far as investing in the silver market. So not much surprises me in the silver market. I think, we're good for a couple of bucks. We already made $1 today. I think we're good for one or two more as a minimum. There's no way to know until we know. But as you said, the paper markets, and I took a look at that as well during this, look over my shoulder service that I provide for the intermediate investors. These are for people that actually have a very good understanding of financial language. They have some technical analysis background, or if they don't, they at least want to learn from somebody that's been doing it for a long time. And I looked at it from the standpoint of, where we usually get a lot of resistance from the people that short the market continuously. The four largest traders in the silver market, which is comprised mostly of banks, or primarily of banks, and also called the commercial category. Anyway, having said all that, it looked to me as if where we stood at as of last night and where we could go, that again, based on what I know from experience, we're looking at probably an easy $2. And again, I'm usually conservative, so, could it hit 40? You bet it could. Where do I think it's going to hit the most resistance? Again, I don't know. I'd stab at it 37, 38. But I also want to add on, you haven't asked me, but, where do I think it's going by the end of the year? And I think silver will double over the year. We started at 30, basically on the open in early January, and I think we'll see 60 before the 31st of December, 2012. Of course, if we end on the 21st of December, then I guess all bets are off.
Yeah, I mean, one of the hardest part about doing technical analysis on commodities is that there's a paper market, and it has an impact on a short-term price movement. And so, you think that the price is going to break out and make all-time high and do great, wonderful things, and then out of nowhere, the price should collapse, and there's a lot of
margin increases.
Go ahead.
Oh, I was just going to say, and out of nowhere, 5 margin increases.
Yeah, exactly. And, and 5 margin increases, and it just create a lot of volatility. So, the paper market can paint the chart anywhere they like. So it's very hard to do technical analysis on commodities, in my experience. What about you, David?
Well, I disagree somewhat. I mean, all those factors are still in the price charts, and they're still in the volume readings. And I agree that, there's certainly management of the markets, all markets, and silver seems to be a special case as far as probably silver and gold, probably more than many of the other markets. But, I put on my hat of think like a criminal. And if you think like a criminal, then you can at times outthink these guys. I'm not saying I'm better than or anything else. All I'm saying is, again, I've been in this market for a long time. And so with my Think Like a Criminal and technical work, I've been able to do well. And also going back to what I said a moment ago, using the COT, the Commander of Traders Report, and we have to give, Ted Butler credit that he's probably brought that report to more people's attention than anybody by far. Certainly I used to talk about it often on the Paplava show, but anyway, so that's a bit of a cue. It's not a real good timing indicator, but it's a good tool. And you can see when we get to a level that basically there's so much, basically it's a tool to determine when the technical trading funds are out of money. And when they run out of money, the banks have infinite money, as we all know. Anyone that's in this sector ought to know that by now. So when the funds are out of money, they can only do one thing, and that's sell. Well, are the banks going to buy at the top from them? No, they're going to sell on top of them. So there's these huge downdrafts, especially in silver. When the funds are out of money, the only thing they can do to lock in their profits is to sell. When they're selling, the banks are selling on top of them, and therefore you get these large moves down. And, of course, all trades have to equal out. In other words, for every buyer, there has to be a seller. So if there's massive selling pressure and there's some naive public buyer out there that has got an open order to either buy at the market or buy at a certain price, that order gets filled until the next one is riveted down. And that's how the market operates. And I'm very clear about that. I've explained that many, many times. It's a little easier to do with a chalkboard, but nonetheless, both you guys are right. You got to think ahead. You got to think like a criminal. You got to use all the tools available. And I still think technical analysis on balance works more than it doesn't work. But I certainly know the fundamentals are key as well. And I'm in the middle. I use both fundamentals and technicals. And you get the all technical guys. Everything's in the charts. Everything's there. Well, if that were true, then you wouldn't know that we're going to be running out of silver in the next, several years. And of course, something could happen. The mining, industry could change substantially, which is what happened when Jerome Smith made a call for $200 silver by 1995. And I went back and looked at his work, and we can discuss that later. But anyway, on balance, no, I think technical work analysis works most of the time. But again, you got to factor in these other things into your thinking to make it work, let's say, in the best modality possible. I hope that makes sense.
Yeah, it makes sense to me, David. And, I'm of the opinion that the long-term fundamentals drive, the long-term technical. So if the fundamentals of a company and the fundamentals of a market are very strong, then, you're going to see the technical chart of a company look very good because, management is growing production, growing earnings, et cetera, et cetera.
That's right. In fact, I'm going to be doing a workshop in Las Vegas in about, 10 days or so on the 3rd of March. And my friend and associate, Courtney Smith, who's one of the best traders I've ever met, he does 1 hour on the fundamentals of a sector. We did silver last time. We could use gold. We could do whatever. And why you bias your trades because of the fundamentals. You bias your trades to the long side. Now, he'll trade both long and short. I'll only buy puts. I feel guilty shorting silver, but it doesn't mean I can't protect my profits, and I do that by buying puts. But, again, I'm disagreeing with you because if you know the long-term fundamentals for it as a commodity only are very strong, and then you know the long-term fundamentals for it as money are extremely strong, then in my view, you're kind of not doing your homework if you don't bias your trades to the long side.
Yeah, so I think that's a good point, David, where people out there need to balance their, short-term interests and their long-term interests because, if you just buy and hold gold or silver mining stocks, then the volatility for a lot of people, the majority of people can't stomach it.
Well, I'm glad you brought that up because I want to be very consistent here. I mean, I do both. Not everyone can. The buy and hold people do quite well, but it's one of the most volatile sectors out there. So if you're willing to allocate 25% of your funds to trading, it doesn't mean you are in and out with 25%. That's just sort of your cash position that you have available to trade with. It could certainly lighten the load. I mean, I know for example, we had still holding a platinum spread trade that I put on at all ego aside, almost the exact day that you wanted to do it. I mean, it was very good as far as the call I made, and it's still working, and I'm just going to let it ride. I want a big profit out of that trade, but I was long platinum, short gold. Doesn't mean I don't like gold. All I'm saying is that platinum is going to go back to its norm, which is above the price of gold. It was well below the price of gold. Everyone was, trying to help me and tell me that, well, platinum's dead because it's only for catalytic converters, and the economy's going in the toilet, and the recession's getting worse, and all these good fundamental factors that may even be true. But I used my gut and my technical work and my knowledge of having been on that trade a few times before. I won't jinx it because I'm already in the profit zone. I never actually lost on that trade. So I put that out there for everybody that watches what I do. But coming back to what I wanted to say, I'm sorry I got off on a tangent. What I wanted to say was that the buy and hold investors are fine, and you'll do well, but you do have to really ride a really tough ride. Whereas if you are able to position trade, it could take some of the sting out, because even though the majority of your funds are getting, going way up, and then you lose 30% or whatever over 6 months, you have that 25% swing position, and you've bought puts to protect yourself, or you made a couple of good trades in the interim. Psychologically, it just feels better. I mean, I've been in the market too long for me to just sit there and watch it all the time. I mean, I watch it so much that when I see an opportunity for what I consider to be a good position trade, I'll take advantage of it. Do I get it right 100% of the time? No, I don't. In the 2008 debacle, it looked to me like 1250 was the bottom. And if you look back at the chart and put it on a day-to-day basis, 1250 looked pretty good for a couple of weeks or so. And then it broke through that and went down to under 9, actually. So, I got in at the 1250 level at a cash position, not on a futures basis. And then when it hit 9, I still had some cash left, and I was able to buy 3 commercial bars at the $9 level. If I would have held off and timed it perfectly, I probably could have bought 6 or 7. But regardless, it's tough. But all I'm saying is, if you look at the chart now and you say, geez, you got to win 1250, you're a genius. You're awesome. How could you do that? Well, it's all perspective. I mean, at the time, a 1250 move down to 9 could hurt you very badly if you were using leverage at that time. Whereas, if you look at today's chart, you look at where the 1250 shows up on a long-term chart, it looks like you got very close to the bottom. So, again, trading isn't for everyone. I'm certainly not trying to convince anyone to do it. But it is, if you are able to do it and not get overtrade and be capitalized properly, it can make a big difference in the psychology of the fact that you are making these pretty decent gains over, a few months time frame. That kind of, for me, is very satisfying. But I don't want to get the reputation as just trading, because I'm not. I'm more of an investor mentality than I am a trader. But nonetheless, why not take advantage of a market setup when you can?
And you are the Silver Dash investor too, David. So, I mean, you're very good. You have both skill sets. I think, the mentality of being an investor is one skill set, and I think the mentality to be a trader is another skill set. And I think a trading mentality, to have that additional education, is a lot more, time and effort to learn to know what you're doing, especially to do right. I want to transition to another question here, and I want to bring up another silver investor, another top one in the market there, and that's Eric Sprott. Now, Eric Sprott did another offering for the PSLV, the Sprott Physical Silver Trust, and I was wondering your opinion about exactly how much of an impact do you think the buying of that much physical metal had on silver's latest paper price rise, and if you think Sprott has bought all of that physical metal yet, or do you think he still has a lot more of his order to fill?
Oh, excellent question, or at least one of my favorites. So I'm going to try to be very specific as far as what is my opinion and what is a fact. So going back to the start of the PSLV, I actually met with Eric and some of his main people right before it was actually issued, and they were determining whether they should put it out in the U.S. markets or not, and they made the decision that they would. And during that conversation or that meeting, I actually asked them if they wanted any help finding, some silver or not. And he said yes, they would. Yeah, they might want to, have some help there. So I went over to some undisclosed, and I won't disclose them, but people that are very close to some of the larger smelting facilities in Europe, and gave them the numbers, because that was out in the public domain. Sorry, it was in the public domain what they were going to buy, what the offering would be, and the word we got back was that it would take about 2 months and move the price about $4. So we related that back through my friends, and those are numbers from this particular group, not mine, but I know how good they are, and so I relayed those numbers back, and so the fund was launched, and lo and behold, it's a fact that it basically took about 2 months to get all the silver in and basically move the price $4. So now, fast forward to more recent times, it's been more than a year for the PSLV, and Eric Sprott announces, or Sprott Management announces, that they have a shelf filing for $1.5 billion. And I'm thinking, wow, this will be interesting. So they let me know like the night before that it was going to be, out there. It was like a 24-hour window or something. And we didn't participate, but many people did, funds. And it was roughly $300 million. And it brought roughly 10 million ounces. And I thought, well, that's 10 million. By the way, on the first tranche that they did, it was about 22 million ounces of silver, if memory serves, moved the price $4. So, it's a simple arithmetic problem. If that's true and the market's still as tight as it was when the PSLV started, you can do a round number and say it's about half as much. It'll probably move the price about half as much. Well, guess what? That offering, that took the price up $2. Now, that's more opinion than fact. I mean, it's a fact it moved up. You could look at a chart and say, no, it wasn't 2, it was 2.5, or no, it wasn't 2, it was $1.86 or whatever. But the idea is very sound. It moved it up. So the rest of the story is there's about $1.2 billion left that could be triggered at any time. And I believe that Mr. Sprott, and this is opinion only, I do talk to some of the people that work for Sprott. I don't talk to Eric directly very often, but let's say I'm fairly well connected. Anyway, I think, opinion only again, that any time that the silver price gets down into the low 30s or even, and certainly below 30, I think they're willing to pull the trigger, not necessarily for a huge amount, but maybe another, 10 million ounces or so. And if 10 million ounces is, relatively speaking, not that big an amount. I mean, we mine about 730 million ounces in a year. So, 10 million ounces relative to 730 isn't really that big a percentage. Nonetheless, it's being tightly held. So if there's not that much that's available, 10 million can be quite a bit. So my point is that I think, I really think he's calling their bluff in a way, that everyone says, there's the silver bears out there, and that's fine. They can have their opinion. My opinion is much different than what I read about this over massive supply of silver, and it's going back down to 21 and all this other stuff that's out there. There's a couple banks that are just, looking for silver to be $17 5 years out. I mean, I don't know what these guys smoke, but it must be awfully good.
Great story there. And your story, as you said, shows like how tight the supply of silver is right now, and a lot of critics of owning silver often say, well, if the supply is so tight, how come the prices hasn't been going up, especially in 2011? And a lot of it has to do with, part of it is the manipulation by the banks, and a lot of it has to do with silver being an industrial metal too. Now, a lot of people don't know this, that silver used to be used as money in the early 1900s by the Chinese. They were on the silver standard, where their money was backed by silver. How come people often forget that silver is as good as money as gold, and now they only view it as an industrial metal only?
Oh, great question. Well, a couple things. One is, first of all, it's a fact that China was the last to go off the silver standard, so that's a fact. You can go Google it and verify it. The other question, I think, the part of the answer is that the greatest lesson of history is that people don't learn the lessons of history. So
Amen.
Most people don't really study history. They don't understand money. I mean, that's, the subset of the Morgan Report is money, metals, and mining. And no, we do a lot in the mining sector. We do a lot in the money and metal sector as well. Anyway, people don't get it. They don't study. They don't understand it. And unfortunately, especially I think in the Western culture, probably more than in the Asian cultures, they have a very short-term outlook, a very short memory. It's all about, what did you do for me today and what are you going to do for me tomorrow? There's very little long-term planning. There's very little, thinking 3, 4, 5 generations out. And unfortunately, what you just said is very much proof of that. I mean, I've had guys that are older than me come up and show me a silver certificate and say, do you know that we were on a silver standard? And I just laugh because, I'm old enough to be have a good memory of when we had silver coinage in our pockets. And I saw plenty of silver certificates, not a lot. I mean, it was 11 when it changed, but I, knew what a dollar bill was, and it, was a silver certificate. It was a actual contract. It was a note that specified what was being sold. It's a silver certificate that certifies there's on deposit in the Treasury of the United States of America, $1 silver dollar. And that was a receipt for that. You could take that receipt to a bank and get money. It's a receipt for money. That certificate is a receipt. It's not money itself, although it could be traded as money if the counterparty accepted it. But final payment really didn't take place until you took that piece of paper and got what it was in exchange for, which was a silver dollar. But, people don't get it, don't understand it. And, of course, there's a huge amount of counterintelligence. I shouldn't probably use that word, but a huge ability for the mainstream media to get people to focus on things that are extremely important, like, what Britney Spears is doing and, what happened to Michael Jackson and, how many people are going to be drafted in the next NFL. And I'm a football fan, but I mean, they focus on the wrong things. They don't read. They watch too much TV. And I can be very critical of others, but believe me, as critical as I sound, I'm more critical of myself. I'm pretty hard on myself and pretty easy on others. But the point is, to be your best, you've got to sacrifice. And to sacrifice some TV to learn why we're in the mess we're in, I think is a worthwhile sacrifice. Of course, I've made it my living. But it's a passion, and it's something that, sometimes I get so frustrated. I like to just go out on the street and just grab people by the shoulders and say, hey, wake up. Do you know what's really going on? Do you know what the Federal Reserve is? Do you know how money's created? Do you know, and of course I can't do that. I'm using that as a metaphor. But with the Internet, I actually have the ability to do that. With my YouTube channel, my Twitter feeds, my website, the speaking engagements I get asked to, interviews like this, which I graciously accept, and I'm very much admire guys like you at your age that have woken up and are helping to spread the word, because the only thing that's going to make this thing work for everybody and to get us on a playing field that's honestly based, truthfully based, and has integrity is for younger guys such as yourselves to carry the torch and keep marching majestically on with the truth. Because when you get down to it, that's all that really matters. We have to be honest in all of our affairs, and certainly the monetary affairs is probably the most corrupt of all. And once the monetary system corrupts, then all others follow along with it. So you get the moral decay of the society at large. You get a decline in food. In other words, you get all these like GMOs and all these pesticides and these foods that look great on the outside and no nutrition on the inside, and on and on and on. Now, people may say I'm making a false connection between the decline of the monetary system and the decline of society and decline of all that goes along with society. But I'll tell you, if you read the book Collapse of Complex Societies, I think that a lot of those academics make the same point that I'm making right now.
And what you just said is like a reflection of our education system in this country. What we learned in our history class and our political class, and it's not actually, some of it's not actually true. Like, for example, the Great Depression, the 1920 Depression, that whole event in U.S. history is completely misinterpreted and not analyzed in the right way. For example, a lot of people blame capitalism for the cause of the Great Depression, when actually it was Keynesian economics that caused the Great Depression, with government interference and the Federal Reserve manipulating the money supply. But after going to this conference in D.C., Students for Liberty, and seeing all these young students that they think for themselves, have their own mind, and also seeing a lot of people out there going out and buying gold and silver, I actually started to think there's a paradigm shift that's going on in this country. I mean, already this year there are more people buying silver than gold, and a few reasons for that. A lot of people think it's more undervalued than gold, and a lot of people can't afford gold, because one gold coin is like $1,800. A lot of people on Main Street can't afford that, so they buy silver instead. Do you agree with that?
Well, absolutely. I couldn't have said it better myself. And that's what happened in the last bull market. A lot of people that might have wanted to buy gold turned to silver because it was more affordable. And that's a forecast I made, and it's not really even a forecast. Really, it's just an acknowledgement of what took place earlier, and I just acknowledged that I felt strongly that we'd see that again, and we are. And the other thing to point out and to emphasize the point you made, Mo, is that last time there was probably twice as much physical silver for investment as there is right now. And this time, we probably got 6 times the market share that we had last time. What I mean by 6 times, and that's just a number I'm throwing out. Let me restate it. I don't know what the number is, but it's a several-fold increase, because you've got Chinese buying silver, you've got Europeans buying silver, you've got the world buying silver. Whereas last time you had basically some, people that were wide awake in the United States buying silver, but you didn't have all these other nation states citizens buying silver. This time you do. So you've got a lower supply and a much bigger market than the last time. So I really think that silver, not only is it undervalued now, it's not even fair valued. I think when it goes overvalued, it's going to go overvalued to a degree that's going to be substantially higher than the overvaluation, if you want to call it that, of 1980.
Exactly, David. And if you study the psychology, which is like Dines and some of these other guys' specialties, a lot of markets in general, and this is just based on, human psychology and human behavior, markets tend to go from very undervalued, and then there's a paradigm shift, and then it goes to, very overvalued / bubble status. There's normally not a lot in between where you have fair valuations, because that's just the way humans tend to react.
Yeah, again, well said, Jason. That's correct. What would be the fair value right now? I really don't know, but to just throw a number out there, for talking purposes, for thinking ability. If you go back to the high of 1980, using the CPI that the government produces, which is highly questionable, you'd be at about $150 silver. But that was a high. That was a one-day spike. So if you back off from that, if you just look at, what would an ounce of silver buy back in, say, the mid price of all of 1980, and I forget what that number is. I think it was like $20. If you looked at that price and fast forwarded it till now, we're still undervalued, but substantially undervalued. So we've got a long ways to go. And can silver and gold get overvalued? And the answer is yes, they can. I did this question recently on another interview. And, you know, the mantra, I'm almost tired of saying it, but we've all heard it again and again, that, you know, an ounce of gold will buy a fine men's suit, you know, shoes, socks, shirt, tie, umbrella, hat. You know, you're going to get everything for an ounce of gold in a really top quality. So if we accept that basis as like the median price of gold over time, if that 1 ounce would buy you, you know, 25 suits like that, would it be overvalued? And I'd say probably yes. You might want to go into the men's clothing business. I don't know. But all I'm trying to point out is that you should value the gold and silver relative to what it purchases in the marketplace, and think of that much more often and much more deeply than trying to peg some stinking paper price on it, because paper can go to infinity. I mean, look at Zimbabwe. Now, I'm not saying the U.S. dollar will, and in fact, I don't believe it will. I think it'll burn up well before it gets to the Zimbabwe status.
Yeah, David, I think right now we're experiencing in the real economy in the U.S. some sort of stagflation, worsening stagflation, where we have, you know, the higher prices in everyday items, consumer staples like food, energy, insurance, rent, that types of things. And then, you know, we also have real unemployment rates increasing. I was wondering what is your opinion of the inflation versus deflation debate going on now, and how do you think gold or silver will fare in an inflationary scenario, and how each of them would fare in a deflationary scenario?
Okay, well, I was on stage in Vancouver a couple years ago for the January show, and it's the only time I think I've ever, in fact, it's the only time I have ever written out my speech, but I wrote it out basically on the inflation-deflation debate. And my summary on that speech was that I'm looking past the inflation-deflation argument. I'm looking for a currency crisis. And the currency crisis is basically near the hyperinflation side. What it really means is that it doesn't have to be a super high inflation rate. A currency crisis takes place when the currency is shunned, when the currency is no longer accepted. It happens when people say, I would rather have a jar of peanut butter than a dollar bill. And it doesn't have to be on an individual basis, although it can be. It could be more on a nation-state basis, where the Chinese say, I don't want to buy any more of your debt. And this is what we're seeing. This is absolutely in our face right now everywhere, especially even looking at the mainstream press. China and Russia trading with each other, not going through the dollar. China and India, same thing. You're seeing more and more nation states that have made these agreements with each other that they will trade directly with each other in their own currencies without circumventing the U.S. dollar entirely. This is a fact, and this is something that you've got to be aware of, because this is a basic beginning of the currency crisis that I've predicted, and others, for so long. So that's my take. Now, I'm going to drill down a little further, because people are going to say, well, you evaded the question. What are you, a politician? but that's, I think, important to get out at the front. As far as hyperinflation, I don't see that really taking place in the United States. I see enough inflation where it cripples the country, and basically there's enough impetus to, again, get rid of those dollar bills for something of merit, and for the bond market to really start coming down. And that would be the destruction of the dollar. Again, the currency crisis scenario. And I think in that scenario that gold would do well and silver would do well. But I'm going to come back to that. On the inflationary side, the best asset to own through most of recorded history has actually been silver, and that's pretty provable. Again, going back to the speech I wrote out, because I wanted to give credit and cite all the examples, which came from Professor Roy S. Jastrom on a book called Silver the Restless Metal. He'd written a book previous to Silver the Restless Metal called The Golden Constant, that looked at gold as purchasing power, as I talked about, looking at gold's purchasing power over several centuries, and what it would buy in terms of other commodities like wheat, oats, wool, dairy products, that kind of thing. And what we discovered was that gold actually does best in a deflationary environment. But I have to give a caveat there. A lot of the time that fact was emphasized in his book, we were actually on a gold standard. So, what it really says, if you read between the lines or think like I do, is that, money in a deflation has a lot of buying power if it's real, and gold is real money. So moving on, I believe that people seek certainty. I mean, most people are not looking to get exceedingly rich. They're looking to have stability and certainty. They want to know, if I save X amount of dollars, that I am set to retire and I don't have to worry about it. And those days are long, 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 long gone. No one knows what a dollar is going to be worth day after tomorrow. So that puts a lot of uncertainty in the market. Well, the only monetary assets that are certain are gold and silver. Now, their price can vary, but the certainty is that they're real. They don't wash away. They're not at the edict of government, which is what fiat means. Fiat means edict. And so people that understand these things will gravitate naturally in the gold and silver markets, and these are the early adopters, you might say, the people that are in the market now and hold physical. But as the market moves up, as you said, Jason, about psychology, the psychology starts to feed on itself and becomes sort of eventually it becomes a feeding frenzy. But as the market starts working off the overhead resistance that we're now looking at in silver and somewhat in gold, although gold's getting, real close to the 1800 level, and they start to follow the leader. Their neighbor bought gold. Well, now it's not such a bad idea. Maybe I should buy some. And then, more and more people enter the market. But
herd mentality.
Yeah. So to make it real clear, I think that regardless of the scenario, inflation or deflation, I think both metals will do well. Historically, gold does best in a deflation, better than silver, although that's not always the case. But I think this time that, again, as Mo said earlier, people are going to look for an asset that works. Money works. Real money works. It always has, and it always will. And as things deteriorate, either up or down, people will start seeking certainty, and that means both the metals. So I'm pretty bullish either scenario. I know there are people that disagree with me, but if you're open-minded, you have to admit what I'll admit, and that is that until we get there, no one knows for certain.
And one of the things people take granted is money and its function and what it should be used for. It's nothing but a medium of exchange. You use it to buy a good or a product or a service. But money should not be debased. It should not be destroyed. And that's what's happening right now with the central bank. The Federal Reserve, the European Union, and all the other banks around the world are trying to debase the currency and print lots of money and create inflation so they don't have to worry about the debt, because then they can pay the debt in cheaper currencies. So it's a typical Keynesian experiment that's going on right now, and it's going to fail. I don't know when, but it will fail, and the outcome will be bad for all fiat currencies. Now, I want to shift gear here and talk a little bit about the mining stock and how it's going, and how it's going so far in 2012. And if you notice, the mining stock hasn't cashed up yet with the physical bullion market for gold and silver. What will it take for the mining stock to actually cash up with the physical bullion market for gold and silver? And a colleague of mine and yours, Chris Marchese, told me that the mining stocks are as undervalued as they were in 2008. So what's your take?
Well, first of all, I agree with Chris, and I think it's really the biggest opportunity out there. But I also want to be consistent. If you don't have any exposure in the precious metals, I'll be consistent and tell you I think you really should start with the physical metals first. But once you've accomplished that, if you really want to get some leverage and get massive capital gains going forward, I think you should definitely look at the mining stock sector. There's a lot of these stocks that I think are really going to run. And the reason I say that is lots of reasons, but technically, it looks like we're pretty much at the launching pad right now. And when I say right now, I want to be clear. I'm meaning the next 2 to 3 months before I think we're going to break through the upside And we're going to see a move in the mining shares that might be similar to what happened in the 1930s depression, where the whole market is going south while gold equities and silver especially are going higher and higher and higher. And this is something that we haven't talked about in a while. I think it's very, very important that most people that will get in the gold and silver markets will never touch the physical metals. They're too lazy, and they'll think that the prices are too high because gold's at, pick a number, 2,500, silver's at 50 or something, and they'll say, oh my gosh, I missed it. But there's no upside to the mining stocks. That's what they'll think. Of course there is, but they'll think it's unlimited. So they'll think, I missed the market on the physical, but I'll buy XYZ mining because listen to this story. And a lot of these junior companies are nothing more than that, story stocks. But they'll be, in my view, the biggest mass movement into the mining shares you've ever seen in the history of mankind. And why do I say that? Because of the internet. Almost every Tom, Dick, Harry, Sue, and Samantha has got some type of trading platform that they can click with the mouse and find some undervalued, in their opinion, mining share that they're going to buy and become rich overnight. They're going to make up for the mistakes in their 401k. They're going to make up for the mistake that they signed a mortgage they shouldn't have. They're going to make up for the fact that they've been unemployed for 6 months. They're going to put all their hopes, their dreams, their wishes, and their desires into some mining stock or stocks. I think you're going to see a rush into these things. Now, when is that going to take place? Well, going back and relying on you guys who are very clear thinkers, no one knows. I don't know. I just told you I think we're 2 or 3 months away from the beginning of that. And those type of runs, which if you're an Elliott Wave guy, and I'm not, but I have some good technical friends that are smarter on Elliott than I am, think it will be the 5th wave. And that could go on for a few years. So you might get a breakout where we finally get, above the 550 level basis what the HUI got. I'm using my memory. I'm so burnt out tonight. And then, 600 and 700 and 800. Wow, this is starting to go. And it just keeps going. So I'm very bullish on the mining shares. I really think that it merits a look if you have the ability to take on added risk. It's not as safe as bullion, I admit that. But I also think if you want to catch up to the people that were able to buy silver under 10 and buy gold under 500, the only way you're going to be able to catch them is to buy the mining stocks. Now, I want to be very clear that most of these small penny exploration story stocks are really the place to avoid entirely, unless you're extremely skilled. And the best places to be are your top tier or mid tier companies that have real production and real assets. In other words, you're buying their silver and gold in the ground that's going to be sold in the marketplace. And these are the type of investments that the large hedge fund managers will gravitate to because they cannot move large sums of money into some very small capitalized mining company or exploration company. But they can move large sums of money into billion-dollar companies that are, at the top tier of the precious metal sector, or to go a step further into the base metal miners such as BHP or one of those type. So I think that even those larger companies will act like, penny stocks in this next bull run, meaning that you're going to see companies that have a $1 billion market cap become a $3 billion market cap, or maybe 4. So I think, and that's pretty phenomenal returns. I mean, we're talking, something like Dell Computer in its heyday or that type of thing after it's been on a growth curve for quite some time. It still get, how could it double again? I mean, it doubled and then it doubles again. And I think that's possible. But again, I'm biased. It's my life's work. I'm very studied in this matter, but I also have a vested interest. So in a way, I'm talking my book somewhat. But I also believe it sincerely. I wouldn't be saying it. I really do think that that's going to be the sector that, 10 years from now, looking back in the financial record books, you'd say, geez, I'm sure glad I, put my money out of my, I'm sure glad I cashed out of the top of the real estate when David Morgan wrote that free article about the real estate bubble in 2007 and moved it into the silver market and these 2 top tier stocks that he recommended, and if you'd done that in 2007, you'd be loving life right now. I can guarantee it.
Exactly, David, and those are some great insights. And I think what's most important about you, David, is you're a very genuine person, you're a good, honest guy, and you put your money where your mouth is. So, if you're going to end up wrong, you're going to lose money, being wrong. So I think that's very important for experts such as yourself and ourselves that, if we think something's going to happen, we'll put money where our mouth is, and then we'll see if we end up being right or not. I want to ask you your opinion, David, about some of the actual, different parts of companies in the mining cycle. Now, we're just having the large senior, quote-unquote, senior producers, the Newmonts, the Goldcores, and the Barricks. They're finally, after 2009, starting to generate more free cash flow. The profit margins are finally expanding, and, they've expanded, for over 2 years now for the most part. And I was wondering if you think M&A activity is going to pick up a lot in the sector in the next 24 months, or if you think the mining companies the larger companies with the cash flows are going to be more cautious, or they're going to focus instead on just expanding their dividends a little bit and maybe some share buybacks.
Great question. Well, first of all, let's just take Newmont as an example. Newmont has now structured their dividend policy to correlate with the price of gold. So if gold goes to 2,500, I think you're going to get a 6.7% dividend. So anyone that, one of the big questions I get from large investors, because I deal with all kinds, of course, but I have, a fair amount of very sophisticated people on our advanced services, hedge funds in particular. And a lot of these people are looking for income off of their gold investments. Well, there's several ways to do it, but one of the best ways is to do nothing. Let the company pay you as an equity holder your fair share of the profits. Well, Newmont's basically stepped up to the plate and enacted that policy, so I'll tip my hat to Newmont. As far as M&A is concerned, yes, I think you'll see a lot of it. I mean, you can't grow a Newmont very easily. All you can really do is grow it by acquisitions or at least maintain it. If you're, mining X amount of metal every year and depleting at a pretty strong rate, you want to replace it by X amount or greater every year. And the only way to do that in these very large corps that you mentioned is to find the real deal. In other words, something that's already being mined, or very close to it. In other words, a feasibility study, everything's been done. You know the ore is there. You know what the costs are, and you go and you buy it. And that will continue. So those are good opportunities if you're a savvy investor to understand what these other companies will be looking for, because usually they're bought at a premium because the people that acquire it have, one, got the money, and two, are willing to pay up because they know how to mine it and they know what they're getting. So in an environment where the price is continuing to rise over time, they actually end up looking pretty smart for the shareholders, at least for quite some time. And was there another part, M&A, dividend policy, and did you have another part of it? I forget.
Potential share buybacks, because, instead of getting tax extra, with their shareholders getting tax extra, maybe it's smart to cut the denominator first with share buybacks before you go and issue a dividend.
Yeah, I think you'll see that as well. I mean, Silvercorp is good at that. And, having a degree in finance, I think both you guys do as well, and that makes me anything other than me. But, when you run a corporation, be it whatever type, I mean, basically your job as a CEO or one of the CFOs, the top management is really supposed to be looking for ways to enhance shareholder value. And sometimes that goes with investing in another company or inventing a new product in-house or anything along those lines. When a company buys back their own shares, what they're really saying is that there isn't anything out there that we like better than our own company. And we're going to buy our own shares back with the cash position we have. I find nothing wrong with that myself. I think it's actually a good vote of confidence of the upper management. Silvercorp's done it. I think you'll see others do it as well.
I think it's sorry to interrupt you, David, but I think it's a great strategy for some of these producers that have very large, short interests. I think it would really help with a short squeeze besides just the dividends.
Well, I took the words out of my mouth, and I agree with you, and I really like that idea because there's a lot of shenanigans in the market. I mean, I am free market. I don't want to be hypercritical because I don't really think there should be a lot of regulation, but I think that there has to be some. I'm pretty strong on that. I mean, when you look at some of these stocks, and I'm not talking about the majors, but some of these mid tiers or juniors, and the float is X, and there's 2X shorted. That's impossible. You cannot short more shares than exist. And yet this takes place. And where are the regulators on this stuff? I mean, it just really irritates me that, what goes on in the financial world these days. Now, in fact, it's more often there than you would think. I mean, one time, once every 100 years or something like that. Okay, well, that's human nature. People get greedy. Somebody misses something. Somebody gets paid off to overlook it or whatever's going on. I'm just making stuff up, but I'm giving the correct idea. But when this goes on and on and on and on, it really discourages people from even getting in the game. And I use the game rather loosely because in some of these situations it is. I mean, you're really taking a big risk, especially on some of these smaller companies, on what's really going on. In the short position, I'm favorable that you should be able to trade the market on both sides. I don't have a problem with that. What I have a problem with is the rules and how they seem to me to be favorable to the short interest time and time and time again. I mean, every time you've heard about silver being manipulated, it's always been manipulated from the long side. But if you can manipulate something from the long side, you sure as heck can manipulate it from the short side. But no one ever talks about that. Oh, once in a while it'll slip out, like I guess Jim Cramer, talked about it once on YouTube, and I think they pulled it. But talked about, getting on the horn and talking to a bunch of his friends and, talking down the stock and making it move down. And that can happen, and it does happen. But so I'm just reinforcing what you said, Jason, that, a company that knows it's got it together, knows what their asset base is, knows what their cash flow is, buying back their own shares could put a little more pressure on the short position, and maybe these guys have to buy back eventually and put the heat on them. I think if that took place and really burned a few of these people, you might see the free market clean up the activity somewhat.
Yeah, I think it's ridiculous what some of the regulators allow, with the failure to delivers, the naked shorting, the counterfeiting of shares with, like you said, where it shouldn't add up. There shouldn't be that many shares, and, it just, no one does anything about it. Like they just continue to add stuff to the regulation SHO list, and then no one does anything.
Yeah, I mean, I'm frustrated. I mean, kind of, you go to the balanced budget. Well, remember Graham Rudman? I mean, Graham Rudman was supposed to say at law that you can't go above the budget. Well, guess what? They do an end around. They say, well, we'll vote. We'll say, well, we could go above it now. Well, that happens all the time now. Every time you're getting raise this debt ceiling, raise the debt ceiling, raise the debt ceiling. Well, laws are there for a purpose, and when they don't mean anything anymore, they're meaningless. And the whole premise of the foundation of a constitutional republic, which gives you your God-given constitutionally secured rights, your inalienable rights, that basically come from either God or from nature or the universe, however you want to term it. I'll choose God, but those things are protected at law. So it isn't a democracy. A democracy means mob rule. And mob rule is when the majority votes they want a free lunch from the people that are willing to work. And that comes to an end. And that's basically where we're at right now, because we've morphed from the rule of law to a democracy where people are willing to vote themselves benefits on the behalf of somebody else. All the government is a middleman. They really don't produce anything. Well, let me correct myself. They produce misery. But outside of that, they don't produce.
They produce more lobbyists, and they produce pork projects, and they produce more bureaucracies, bureaucratic agencies.
Well said. So I'm off my rant. We should probably go back to the metals.
Well, great insight, regardless. And one final topic that we would like to discuss before we let you go is the end of cheap oil and solution for the end of cheap oil. And today, this morning on Yahoo Finance, there was a big headline on how the White House is coming up trying to find ways to figure out how to lower the gas price. soaring around the country, and they're talking about solar energy, wind energy, and then drilling is off the table, and the Keystone project is off the table for now. But there is one form of energy that no one's talking about, and that's thorium energy. And thorium energy is another form of nuclear energy that most people don't know about, and thorium is a radioactive metal that's found on the periodic table. And many benefits that thorium offers is that it's more efficient. It produces less than 1% of waste of today's uranium nuclear reactors. They're safer, they're less expensive, they're smaller, and they can be configured to prevent meltdowns or accident, and it can't be enriched to turn into a weapon, which is another great thing. And I noticed that now you are paying attention to the thorium energy, and I want to ask you, what got you interested in the thorium market, and do you think it's a viable solution as cheap electricity for this country?
Oh, great question, and thanks for the good introduction. Well, one of it is a long time ago, I changed the report name from the Silver Investor, which was the name of the website and the report, to the Morgan Report. The reason I changed it to the Morgan Report is that I am luckily have the ability, and I want to keep the ego out of this, but basically I've been pretty good at being a visionary, and you can take that at face value or not. But I was into the cellular phone thing well before people even bought them. I mean, I told my father about the cellular phone phenomenon the way I saw it when there were 12 people in the United States that had these bag phones that were as large as a big 12D shoe for a gentleman or a man. And
or a gecko phone.
So I told my father about that, and he said, David, I actually believe you're right. I think this is an investment opportunity of a lifetime. And my dad put a great deal of his liquid capital into the cellular phone industry and actually did quite well. So I'm not just focused on silver, although I have been my whole life. I mean, there's nothing disingenuous on the website about how long I've been studying the metals because I got interested in money at such a young age. But I changed to the Morgan Report because I thought if there is the ability to find something that's worth investing in as this metal phase turns into a bubble, which it could, and there are opportunities out there. I don't want to be locked into I'm only the silver guy. And, of course, this is only true for people that really buy my work, that pay me something, because anyone out there on the Internet that's getting it for free knows me as, linked to the silver market. And that's fine. I don't have a problem with that. But I'm deeper than that. So the question that I gave to myself in the January issue was I wanted to focus more on solutions rather than problems. I mean, it's, all I talk about, especially in these interviews, and I don't mind doing it. I'm here to help and try to, solve the problem. But it was how could I, help solve the problem more? What are the solutions that are available? And, of course, I started looking into thorium. And the more I looked into it, the more excited I became. So I did kind of a white paper in the January issue about thorium. You guys picked up on it. I think Jason knows far more about it than I do, but I'm also, big picture guy. I mean, I could get into the details, but at this point in my life and where my interests are and what I do best, it's really better for me to turn some of the details work over to, young, bright guys like yourselves to help me do the deep digging research that I used to do all alone. Now I have people I can, call on to help me. But you have to have the big picture right before you can go deeper. And I, studied that at a pretty, fairly in-depth level to come to the conclusions that Mo outlined. I think it is a viable solution. I think that one of the presidential candidates ought to be talking about this. I think somebody to stand up with some backbone and say something, but you don't. I mean, it's really frustrating. Again, I use that word twice in this interview that, there are so many solutions that are really out there, but the free market capitalism, the laissez-faire way of doing business, the let the people do their best has been stifled for so long, and everyone's got the inability to really have an entrepreneurial spirit and go out and really do something because they know that they've got to get the blessing of XYZ agency, and then they've got to get a license from another agency, and then they've got to go to the city council, and then they've got to get the EPA to look at it, and then, it goes on and on and on and on. Look, thorium reactors aren't very difficult. They're cookie cutter situation. You could put a plant up in one of these put it in Detroit. Let's rebuild Detroit. We put Detroit back to work. They make cookie cutter thorium reactors day after day after day, and we place them where we need them, and we get energy independent. What a concept! Would that work?
For under $100 million, once there's the ability, to manufacture all the parts, I've seen estimates for under $100 million per reactor. It is pretty crazy.
Yeah, put me in for president. That'll be my platform, energy independence. We'll put thorium reactors. We'll try to wake up a few people. I'm joking about the run for office. I just would not do it. I just am not capable of handling the political system as it's currently structured. I just couldn't do it.
Yeah, exactly, David. And I think you nailed it right on the head there, is that I love gold and silver. I'm definitely, a silver bug. I'm full on. But studying markets and studying monetary history and looking at the psychology of human beings is that, eventually, I don't know how many years it's going to take, but gold and silver, either the markets and or governments are going to fully remonetize them, or we're going to have just a mania blow-off bubble phase, and then, it's going to be very dangerous to hold gold and silver-related investments. It's going to be time to find another undervalued asset class, which might be, like investing in this cheap energy, cheap electricity, cheap oil crisis that I see coming in the next 7 years. That might be something. Real estate, Michael Maloney is saying he wants to invest in real estate. That might be something else. So that a good chess player, I guess, is trying to think of what the next couple moves are after this. So, we know when we think it's time to cash out, when all of our friends that called us, crazy or stupid or whatever, they're all buying stuff. Then that's when we're going to know, I guess, it's the time to find another asset class.
Yeah, well said. Just add on, and I really can't add on anything significant, but one of the areas that I'm really not that fond of is when the top does come, or I think it's there, and then I start to get, people to tell them I want to sell, or I'm going to sell, or I'm selling part, or I'm easing out, or whatever, because these manias can really get extreme, and there's nothing bigger. There's no bigger mania. There's no boom like a gold boom. There's no fever like gold fever. And if you think the gold bugs are insane, the silver bugs are even worse, and I love them all. But I'll be called every name in the book. I'll be called, turning over, become a member of the Illuminati. Who knows? That there'll be all kinds of nasty grams, as I call the top. But you know what? Go ahead.
But you don't want to be, the guy who held Intel too long after the tech bubble. So I think, you trying to be honest and do the right thing by people, I think, people looking back would definitely appreciate you, voicing concern.
Well, thank you. I remember calling the top at 48 on this last run, and I said, that's it. I had my trading position. I sold into strength, which I've learned over the years. Good luck, goodwill, good call, whatever it was, got out. And I'll tell you, there were several of my associates that were giving me the raspberries on the way up. Oh, you're not bullish enough. You're too cautious. You're wrong. We're going to 100. You're going to look bad. You're going to look bad. You're going to look bad. I said, well, I'll look bad. I'm calling it here. And I'm not saying I'll get it right the next time. That's I've always stated, and I'll state it as we wrap this up, the markets know more than any of us. That's just the way it is. Manipulated, managed, whatever, they're still the markets, and the markets know more. And so, they've humbled me many times. But I do my best, and I am honest, and I do want to, for the record state. Now, I'm saying these things ahead of time so people that follow my work closely will know that, when I say it's overvalued, some will take me seriously because it's hard. The mania, especially when it's a currency crisis, which is the way I see it getting so high, is that it's going to be very, very difficult to sell because you're going to have this, instead of 1% of the population now, you may have 3 or 4% that know the mantra, that know that this is real money, that other stuff isn't, that other stuff blows away, it's worthless. And so it's going to be very hard. Now, I wouldn't suggest going into the paper markets and getting all cash. I can't predict that now. Right now, from what I know, I wouldn't do it. But you want to move into an asset class, as you said, Jason and Mo, that's undervalued, has real, real worth, something physical, I guess, or an idea that's so sound it can make money. So anyway, enough said, I guess. But thanks for the interview. It's certainly been. You guys always come up with some pretty good questions. You get me excited. And you also tax my thinking ability, but I don't mind that. I think more and more people need to learn how to do some critical thinking. It would probably save, help put America back on track.
I couldn't agree with you more, David. Well, that's pretty much wrap up this interview. Do you mind giving out your website to our audience one more time?
No, not at all. It's themorganreport.com, all one word, themorganreport.com. Just get on the free email list if you want to see how I write and what we offer. And then if you're so inclined and you want to learn how to make money in the markets, our best thinking and our best analysis is done for people that pay us. There's 3 levels of service on there. They're over on the right-hand side. I actually made a video of each one, so you get a pretty clear idea of what you're buying ahead of time. It's probably one of the most undervalued assets out there. I should say assets, but undervalued newsletters out there, because I know I've read most of them most of my life, and I know what the products are like in our competitors' field. And I'm not saying that I'm the best. I'd say value-wise, one of the best. I'd also say that there's a lot out there that are not really worth that much. That's my opinion, of course, and I'd talk my own book again. But that's one of the funniest areas in business is the newsletter industry. It's one that usually you get what you pay for. I mean, normally if you pay more for a men's suit, you're going to get a better quality suit, or you pay more for towels, you're going to get higher quality, threads or whatever. But in the newsletter industry, it's not necessarily so. I mean, you can pay $1,000 to one of these outfits for one stock pick that's a penny stock that they've already front run you on. Or you could pay, my service, which is like a little more than $10 a month, and come out with a lot more information. But, the market's a free market. I don't want to be a hypocrite. I mean, if the market didn't exist for somebody sending out a one-time offer to buy one stock pick for $1,000 and someone buys it, that's the free market. So, but it is an interesting industry because there is not the very clear you get what you pay for in this business.
Now, David, do you offer a 1 month or 2 month free trial for some of your paid newsletter products?
Well, I do. By law, you have to let everyone have 30 days for free. I don't say it often, but it's the law. So anyone that's, pays us money and then decides it's not for them, by law, I have to give them back their money in 30 days. So we do have a 30-day free subscription, which is basically just obeying the law. But the fine thing for someone that wants to really get in there and dig around and not pay us anything is you would get in there, it'd probably take, I'm just going to stab at a number, but probably 12 hours to download all the reports, all the information. I'm not even talking the videos that are on there. I'm just talking about the written stuff that I've compiled over all these years. And you can basically download all that and then quit. We've had a few people that do that. I don't get into it because, so be it. I mean, that's their choice to do that, do it. I haven't had that happen very often, but it does happen. But you could certainly, get that free trial and decide it's not for you. It's what's interesting in some of these people that do that is we know when they're on the site because of the IP address. And, I didn't see very much in that for me. I want my money back. And that's funny. How come you're on the site for 20 hours? But anyway, that's life. It's part of the deal, and I understand it.
Well, in wrapping things up here, Dave, Mo and I would just like to thank you very much for your time, and hopefully we can have you back on again here in the near future.
My pleasure. Thank you.